Gold has been trading like the biotechs of the late 90s. I'm Jill Malandrino with Options Profits. Today with me is Alex Steele from The Street. Give us your identifiable trend for 2011 in this trade.
You know, it really was the year of fraught with volatility here, and it was very difficult to trade. I mean, we saw safe haven buying, momentum buying really push it up to the intraday high of 1923, and then the need for cash and liquidation really plummeted about 10% in a few weeks in September. I think we're looking at like 1480 to 1550 or some key levels you want to watch on the downside. But if you look at now, the chart really seems to be intact now. The uptrend is intact for now.
Okay, what about investor demand?
Investor demand is really the linchpin of gold. I've heard that without it, and what I mean by investor demand is the hot money that comes in. You could be looking at $1,200, $1,300 gold prices. So a couple stats you want to look at. When we do see a sell-off in gold, the next day recently we've seen the GLD add tonnage, which means that there is solid investment demand for the physical metal on off days. We're also seeing investor demand in the third quarter rose about 33%. That was one of the biggest investor trends of the third quarter. And in addition, right now in the U.S., we're at a record of ETF inflows, and worldwide into ETP products last week we saw $1.5 billion of inflows. These are very solid demand trends.
Okay, I know it's really hard to predict anything longer than a trading session, but what do you see for 2012 with gold?
I think there are four trends that everyone who likes gold or interested in trading it need to watch out for. The first is the inflation versus deflation debate, and what that means is as we're worried about a global recession and as deflation kicks in, we're going to see gold sell off as investors and traders really need cash. On the flip side, if we see central bankers actually opt for inflation to fight deflation, like the Fed might be apt to do and like the Bank of England has done, we're going to see a rush into gold. Another trend you want to look out for here is central bank buying. They could possibly have bought about 450 tons this year alone. That's double from 2010, and that is from them being net sellers about 3 or 4 years ago. So that is a really big trend as well. Also, we're going to see possibly mine supply start to increase. As the price has steadily risen over the last 10 years, we've seen miners really kick it up in terms of trying to find gold. And mine production has risen 5% in the third quarter. It rose 7% in the second quarter, and that's going to continue to increase. Latin American production alone is going to rise about 10%. I think we're also going to see an uptick in taxes. I think that companies that mine in areas that need cash are going to raise their cashes to get a piece of that juicy pie.
Okay, great. Quick, your top three picks, NEM.
Right, so Newmont, I think everyone should look at Newmont. It has the best dividend in the space, over 2%. Doesn't have a lot of growth. Production was down about 7% in the last quarter, but that dividend is providing some juicy protection.
Moving along to NG.
NG is Novo Gold. This is a very risky, speculative play, but it's a very real possibility that Barrick Gold could take out this company at some point. Just implemented a new CEO, Greg Lang, who used to work at Barrick, and also his last two jobs and his last two mines have been then bought by Barrick. This is a very real possibility.
And let's wrap it up with GOLD.
GOLD is Randgold, has one of the best growth stories in the business. Profit grew over 300% in the last quarter. Production was up 9%. If you want the beta, if you want the sexy, this is a stock you're going to have to pay attention to.
Okay, great. That's Alex Steele with your gold outlook. Thank you.